Right, so I want to go over my trading session on Friday the 6th, where I missed a potential position upon the open of New York Open. And right off the bat, when we're looking at analysis coming into the London session, coming through to New York, what do we see with price? Well, this might not be the most accurate daily at the time frame, but we had Asia swipe all the lows, create the bottom wick, and you were starting to re-break the highs coming into London, coming into New York. The 4-hour time frame also gave us quite a lot of signals that price action is going to continue bullish. This is a pretty strong looking 4-hour candle that closed at 10 a.m. That closed at 2 for price action to start pushing you further. Now, yes, we closed below a support resistance line here at 9.3, but then we mitigated that on the lower time frames too. But I think this is a very key indication that, okay, you're starting to create bullish structure. Normally what we typically see is if price action comes up for the top wick, you're looking to re-break the lows to start coming down. So this was a pretty significant closure for confirmation that I can utilize coming into New York session. And what price action starts to do when we look at dissecting and breaking down the lower time frame. So we've already based narrative of the daily and the 4-hour. Now we're looking for a specific direction and what ranges to identify so I can take advantage of it. So we typically see, okay, price drives off of these areas here. You've seen rejections in the past, so we were expecting potential for something to happen here. But where things really start to come into light is when we break down the 30-minute onwards. We're looking at identifying range, which we have. So we've identified where price action should continue to go. Like I said, we've developed the bias, which is bullish, so we're looking for potential buys. Even though this potential area here looks to be where sellers would enter the market, we're still looking to give us a confirmation. Have we got liquidity being grabbed? Have we got direction of price? Have we got conviction for volume to continue pushing us to the upside? And that we do. So at the time where we were looking for an entry based off of NYSE, we understood the London candles came down from Asia. So Asia got your lows. Price action then started to push up, consolidated, coming into London, you pushed up. And then after the initial drive, you've then ranged to then start a continuation of a breakout. So once price action starts breaking out, introducing volatility into the New York session, you're typically going to see a small retracement before price action starts pushing up. And that's exactly what we spotted. So you've got a very key indication level here that price action stays within a range. So we need the confirmation. We've got the 15 and the 30 telling us that price action will respect the 900 area, which it does. So therefore, on the next candle, we're looking for the push up, and that's exactly what I should have gotten. So had I not been distracted on the charts, or not on the charts, distracted with something else, then actually I would have taken a bottom wick entry, because your previous 5, the 225 candle closure, has given you indication this is a very strong bullish reversal. So price action will respect the range. You've grabbed the bottom wick, you're looking at either taking a wick entry, stops below the lows, or you're taking a rebreak at a previous candle highs, stop below the lows. So you're looking at a potential position that looks like this. You're getting in on here, price action has the lows, so that's about 157, 160 pip stops. We want to allow for some slippage, and then your full take profit is going to be targeting the next range, which is the most recent resistance to the left of my screen, utilizing prior historical data. So in this trade, although it's only a 1.5 risk to reward, you know the certainty of price action coming out on top. We know that you've got conviction on the higher time frames. You've got the daily and the 4-hour bias that's continuing to re-break the current daily highs. Your 1 hour tells you you're coming down for a bottom wick, which makes sense. So price action is still retesting those lows yet again. And then that aligns the time frame because you're trying to re-break those lows. The 30-minute time frame gave you indication that price action is most likely going to start pushing you up. The 15 as well gave you some pretty bullish confirmation. And then most importantly is that 5 giving you a very, very solid verification. This is your validation area. You've got the previous break at highs, so now you can take that push up, and it's a very, very clean candle for price action to take you out of this position. And this is the prime position that I should have taken, that I should have been at the charts ready and prepared to take for a plus 243 pip win, risk 157, 1.55 risk to reward.
Let's go over my trade position that I took on Friday, and that is based off of the 436 candle open on the 1 minute time frame. As you can see, unfortunately for me, it was a loss. It was a loss of 45 pips, 46 pips, which isn't too bad necessarily. And this entry was quite aggressive. We know that we were coming into late trading session, which is fine. That's completely completely fine with me. We understood that price action is still particularly healthy, and we're still overall very, very bullish for the day. So, first things first, the daily time frame. For context, again, you're currently rebreaking highs. As you can see, price action started coming back down within the range, and you're expecting price to finish up a move to at least challenge the highs here at 938, for then a potential challenge of utilizing our momentum for price to continue rebreaking the highs to push up towards your full targets of 495 or 945. So you can see on the hour time frame now, this is already a fully closed candle. Price action swiped the lows, grabbed liquidity. That was the first half of the 30-minute time frame. So once price has done this, this is already a very key indication for me to start looking for traditional buys. We're looking for price action to retest the lows. This is a liquidity grab, so we've already satisfied that part of the checklist. The current range we already know, so the liquidity area has been satisfied. The mirror on price action is the one thing that we need to look for. Now, one thing with this is we don't really have too much prior historical data. What we've typically seen in these areas is price action grabbing liquidity to then start pushing up right here. So your target area is still going to be around this 945 area. If we've got this as an identification, price actions grab liquidity, come down, retests this area. You're looking at an entry here. And my entry was based off of the 36 candle open, because that was the 5-minute candle open here. You'll see this 5-minute rebroke the lows. It rebroke the lows of the previous candle low. But why did I come out with a minus 45 pips stop loss? Well, I'll tell you why if we can find it. There we go. Liquidity grab. The open was this candle right here. You swipe the lows of the previous low. So we're looking for an entry. My entry was, I think, a rebreak at the highs. And once we had the rebreak at the highs, price action came back down. My stop loss was set at that low right there. And the unfortunate thing about this is that price action created a fake out on the next 1-minute time frame to then push you back up. And this is where I went wrong. I put my stops way, way, way too aggressively. And actually, instead of having a rebreak at a high here, you should look for a rebreak at a 30 or a rebreak at a 15. So when you've seen price action drive all the way down, although it's a retest area, we want to look for some form of confirmation price action is still respecting the range. Now, I understand that this bearish doji indecisive is still respecting range. However, what can I expect from a candle like this? You're still expecting price to give you clean closures. So this is still indecisive. Why did I enter? Not only that, had I even just entered here at the retest area and a wick entry, my stop loss should be roughly at these levels, because that's your previous break of structure, it's your previous low of the candle for liquidity to get grabbed, and that's the most logical stop loss I should have. So the actual trade position that makes so much more sense to me is the wick entry at your revalidation area, your liquidity grab, because that is now your low, and your price action target will be up above. Now, granted, the risk to reward ratio of 1.24 is not necessarily the best for me to get into. However, this is a by far way more logical price action quality, higher quality position, because we understand logical price action. We understand the structure that's been created. We understand the liquidity grabs to the left of my screen. We shouldn't end up breaking these areas at all. So price action should continue the retest to then start pushing up, and that's exactly what it did. So once we got wicked out of the markets, price action began to fly right towards my take profit area for a full TP of 134 pips, and I believe that is exactly the same outcome as what I had here. 221 even better. We had an even bigger range. However, if we wanted to be conservative, we'd be stopping out right about that target, which is this level here. To be a little bit more conservative, we'd still come out with 134 pips of profit. So there you have it. There's your backtest session. There's the review of the trade position on Friday. I'm pretty happy with the way I dissected price. I'm not happy with how poor my read on price action was for an entry requirement. And again, it goes back to saying we have a system. Now we have to follow it and making sure we have the highest quality position possible for me to enter a trade. So this is still something that we have to backtest more on to gain more confidence of understanding when the right time is to get into a buy or into any form of position. And that is something that we're looking to continue to keep building up. Do the same thing as this, more backtesting sessions, more time on the charts, more experience, so we can gain a better advantage in the markets sooner.